Hi, I'm Alex Bibani from Allianz Global Investors. I'm here today to give you an update on the global sustainability strategy, where I'm a co-portfolio manager. I think it's been a year of two halves so far. So in the first half of the year, we obviously had the Nasdaq rallying. It was up 40%. The S&P rallied up to close to 20%. I don't think anyone would have anticipated that at the beginning of the year, just thinking about where interest rates have gone. The 10-year in the US is up to almost all-time highs, which should have been a relatively difficult environment for equities. But that was all shrugged off in the first half. The second half is we're coming back to reality. I think that people are now a little bit more aware that markets or the rates are going to stay higher for longer, and the markets have started to price that in. In terms of performance, we're delighted that the fund has kept up with the markets year to date, but we do see further volatility on the horizon, and we are positioned quite neutrally. So we're very valuation focused. A lot of the equities that we had in the fund were AI beneficiaries in the first half. So we've looked at those, we've looked at the position sizes, and we have to think about how much upside is left in those positions. So a few of our actions have been to take profit in some of those AI winners, and where we've redistributed that is back into some better valued opportunities where we've got recurring revenue streams, companies that are able to perform in a downturn, ones that may benefit in volatility. Think about stock exchanges, companies that operate in that type of environment. That recurring revenue theme is very defensive in a down market. So as sort of core blend portfolio managers, we're always positioned in that middle ground. So we're neither growth nor value, and we think that being in that position gives us the opportunity to outperform in all market environments. In terms of sustainability themes, I'll give you three today. So we still see AI as driving markets into 24 and 25 and beyond. The areas that we like to play in there are where we look for companies who may be able to use AI to benefit their own businesses. Rather than just selling AI products, we like the opportunity for cost out and for margin expansion. Then in terms of healthcare, drug testing and the CDMO market, so that's the outsourced drug manufacturing market, has had a really tricky time in 2023 as higher interest rates have caused the funding to dry up for many of these smaller biologic companies. We think that as the rate environment is going to peak, that people will start to come back and spend more money on drug development, and we have some good exposure in that area. The final one would be cybersecurity. IT budgets are going to grow over and above GDP. They will continue to do so as more and more people continue to work from home, and there are more devices in the workplace that need to be secured. So IT budgets and cybersecurity is a very strong theme for us, and we're positioned to benefit from that over the next several years. So I think in terms of greenwashing, it all comes down to what you as a business and what you as an asset manager put in place to prevent that. So we're very lucky in that we've got a huge standalone team of people who then bring in all of the data that we need as fund managers to do our day-to-day job. It's very clear that in the sustainability world, you need scale, and these are all of the things and the steps that you need to take in order to prevent greenwashing. In terms of consumer fatigue, no, I don't think so. I think despite all of the things that you read in the press, the direction of travel is clear. Consumers want to invest sustainably. They want to leave a better world for their children, and all of this consumer demand is what's driving us as asset managers to keep pushing companies to align their businesses with net zero, to reduce their greenhouse gases, to treat all of their stakeholders better. It starts from the bottom, and the more that we can do as investors to push companies to do it, the more other people will do it, and then the more it becomes a groundswell of consumer demand. And then we get to a stage where actually people will ask, why aren't you sustainable? That may not be next year, it may not be the year after, but at some stage, if you're not sustainable, you're going to look like an outlier.